Everyone wants a trading system to do this, tell you where a stock is going. Mine refuses to. It does this instead. It never tries to guess a price. It just ranks every stock against every other stock and asks one question. Today, which of these looks strongest relative to the rest? That sounds like a smaller ambition. It's actually a much sturdier one, and I'll show you why. Last episode, I gave you the map of the whole system and promised we'd walk into its most important room, how it actually picks stocks. This is that room. Two things I want you to leave with. First, why ranking names against each other is more robust than trying to predict prices. This is a real idea, and it'll upgrade how you think about markets even if you never build anything. Second, the actual machinery, the 6 different things it measures about every stock, and how those 6 get boiled down into a single number and a single rank. No hype, no secret indicator, just how the scorecard works. Let's start with the idea, because it's the important part. There are 2 very different questions you can ask about a stock. Question 1, where is this stock going to be next week? That's prediction. It demands you know the future, the exact thing Episode 2 told you no honest system gets to see. Question 2, out of all the stocks I could own today, which ones look strongest relative to each other? That's ranking. And notice, you can answer it without knowing where anything is going. You're not forecasting a price, you're comparing names to each other at a single moment. The technical term is cross-sectional. You're slicing across all the stocks at one point in time and sorting them. Here's why this is more robust. A prediction has to be right in absolute terms. You said $250, the market has to actually get to $250. A ranking only has to be right in relative terms. The names you ranked highest just have to do better than the names you ranked lowest. Think about a brutal down week. A price predictor is simply wrong. Everything fell, your number missed. But a ranking can still be perfectly useful. Even in a sea of red, some stocks hold up better than others. Rank does not need the market to go up to be right. It just needs strong names to beat weak names. That's a far more forgiving bet to be making, and it's why the whole system is built on relative rank instead of price targets. So how does it rank? For every stock in the universe, it measures 6 different things, 6 lenses, each looking at the name from a different angle. Let me walk them, and I'll keep each one plain. 1. Technical. What is the price action itself saying? Trend, strength, the behavior of the chart, the stock's own footprints. 2. Fundamental. What does the underlying business look like? The health and quality of the actual company beneath the ticker. 3. Momentum. Has this name been persistently strong or weak over time? Momentum treats strength tends to continue as something worth measuring, separately from the raw technical red. 4. Catalysts. Is there something on the calendar or in the news that could move it? Events, upcoming triggers, the reasons a name might wake up. 5. Market structure. How does this name sit inside the broader market right now? Its context, its relationship to the wider tape, rather than the company in isolation. 6. Short interest. How heavily are people betting against this stock? Crowded bets against a name carry information, and sometimes fuel. 6 angles. Technical, fundamental, momentum, catalysts, market structure, short interest. No single one of them is the magic answer. The point is that they disagree, and forcing them to sit side by side is what makes the read balanced instead of one note. Now, 6 separate scores aren't directly useful. You can't act on 6 numbers at once, so they get combined into a single composite score for each name. Then that composite gets converted into a percentile rank, a clean 0 to 100 that says where this stock sits relative to every other stock today. A name in the 95th percentile is looking strong compared to the field. 5th percentile, weak. That percentile is the output the rest of the system acts on. One thing about the weights, how much each of the 6 angles counts toward the composite. Right now, they start fixed. Sensible, deliberately simple, set by hand. Over time, the system is designed to tune those weights based on what's actually working, but that's a whole episode of its own later in the season, and I'm not going to hand-wave it here. For today, the takeaway is the pipeline. 6 angles, 1 composite, 1 percentile rank. That rank is how it picks. Let me be square with you about what this does not do, because the humility is the point. A high rank is not a promise. It doesn't say the stock will go up. It says, compared to everything else available today, this one scores well across 6 lenses. That's genuinely useful. But it's a statement about relative standing, not about the future. Whole groups of top-ranked names can still fall together if the market falls. Ranking makes the bet sturdier, it does not make it safe. And it says nothing yet about when to sell or how much to risk, which it turns out is where most systems actually live or die. If you like trading explained as engineering instead of fortune-telling, subscribe. You now know how it chooses. A scorecard, 6 angles, one honest relative rank. No crystal ball. But choosing a good name is maybe half the job. Next episode is the other half, and honestly, the half that keeps a system alive. The risk, guardrails, and the exits. How that single gateway decides how much to risk, and how the system decides when to get out and writes down why. Picking is the fun part. Not blowing up is the important part. If you want to support the project and slash or follow along with my journey, just watching and telling me where I'm wrong or right is very valuable. I'm Sandbox Theory. Thanks for watching the boring version.